Hello and welcome to a Diwali special on the India story. And I'm going to start by saying a very happy Diwali and season's greetings and festive greetings to all the people who are watching this. And every year when Diwali comes around, a lot of us start to ponder a very important question, especially on Dhanteras. What should we invest in? Where should we keep our money? How do we save for our retirement, for weddings, for special events? How do we do it? Traditionally in India, people have chosen this period, Dhanteras, days like this, to invest in gold and silver, and you buy utensils and you do other things. But 2 days before Diwali, it's also important to remember that there are other places where you can invest your money. And now, a lot of Indian investors have become smart. They've started saying, okay, let's start putting some of our money into financial assets because the equity markets have given very good returns over a long period of time. So this particular episode of the India story, we're going to try and get you the advice from the experts. If you want to save, if you want to invest, how should you invest? And where should you invest? That special discussion coming up for you in a couple of minutes. But also, we do have a special interview today on the India story with the entire team behind the Railway Men, one of the most talked about TV shows, which is soon going to be hitting your screens very, very shortly. But I'm going to start, before I do any of this, by taking a look at the top headlines that you should be tracking.
Indian and US foreign and defense ministers meet in New Delhi for the 2+2 dialogue. The talks focus on the Indo-Pacific, defense and technology. India has appealed against the death sentences handed to 8 of its ex-Navy officers in Qatar. Arindam Bagchi, spokesperson for the Ministry of External Affairs, stated that the Indian embassy in Doha received consular access to the detained former officers on November 7th. Bagchi affirmed that New Delhi will continue to provide legal and consular support to former Navy veterans. They were sentenced to death by a Qatari court on charges of spying for Israel. UK plans to put India in its safe states list, which would fast-track the process of sending back illegal immigrants in the country. UK's Home Secretary explained it was important to stop people from fundamentally safe countries from making the dangerous and illegal journey. The UK government determined that Indian illegal immigrants were not at obvious risk of persecution and decided to restrict them from claiming asylum in Britain.
All right, but let's start this Diwali special on the India story by asking that question that you should be asking every Diwali. Actually, you should be asking that question virtually every day of your life. Where should you invest your money? But before I get into the experts, I'm going to just try and put forward some of the mantras that I picked up over many, many years, a decade or more of actually doing shows like this every Diwali. What are the mantras? How should you invest your money? So mantra number 1, do it for a long period of time. You get returns, especially in the equity markets. You will get good returns, but you only get good returns if you have a long-term frame in mind. If you say, I want to buy a stock and how will it do 1 week from now or 2 weeks from now, or I'm going to buy the index and will it do well in 2 months or 3 months or 6 months or 5 days? The answer is nobody really knows. Nobody knows. The stock market can go up and go down, but over a long period of time, you will make good returns. That's been the history of more than 100 years. So therefore, mantra number 1, invest. You must invest, but do it for the long term. Number 2 mantra, don't think that you can trade and specifically gamble on individual stocks. Do that if you really know what you're doing. But remember, 90% of people will lose money in doing that. So you should be in the stock market because stock markets have given very good returns over a long period of time. And if the Indian economy does as well as people think the Indian economy has done, there's no reason to believe that the stock market won't do well. But if you think you can trade in and out of individual stocks, perhaps that's not a place you will make money. Most people will not make money. Mantra number 3, and we're going to talk about it right now, is a concept called asset allocation. If you have 100 rupees, figure out how to divide that 100 rupees, right? You should have a certain amount in equity, the stock markets, certain amount house if you don't have it, certain amount should be FDs and cash in case you need it for some medical emergency, or a kid needs to go to school, have a certain amount of money in liquid assets, and perhaps a certain amount of money in gold. That is asset allocation, and that is something that you should do. Mantra number 4, start early in your life, because everything that we have said works well if you keep investing and saving for a long period of time. If you start when you're 21, that first salary check that you get, save a little bit about it, invest a certain amount of it, and over a period of 20, 30 years, you will build up a lot of money. That's mantra number 4. And mantra number 5, if you are to invest, do consider something called systematic investment planning. Now, what is SIPs? SIP means you take a certain amount of money. It could be 1,000, could be 5,000, could be 10,000, it could be 20,000. Invest it every single month, because especially if you're investing in equity, what happens is it evens it out. You put that same money in when the market is high. You put the same money in when markets are down. At the end of the day, it balances itself out. Over a long period of time, you end up picking up stocks at a good value. You end up picking up mutual funds at a good value. So SIP, that is the 5th mantra. Now, these are mantras that many in the markets keep talking about. What are the experts saying right now? Well, let's turn to them to get their point of view. Well, let's now move to the other possible option where you should invest your money this Diwali, which of course is real estate. I mean, gold, silver, but Indians love real estate, and real estate prices have also been shooting up. Niranjan Hiranandani now joins us, co-founder and MD of the Hiranandani Group. Niranjan, we've been doing this, I've been doing this show every Diwali with you for I don't know how many years, asking you about real estate and whether that's where somebody should be investing. What's your sense of the overall real estate market right now?
Vikram, I can assure you that the market is very, very, very strong. People are definitely looking at real estate in a very proactive and positive way, and they are putting money where their mouth is. So huge growth in the real estate demand is taking place. It almost sounds like a backlash to the COVID story. So, I mean, I really don't know whether it's only the backlash of the COVID story to be real, but in reality, ever since the COVID issues got sorted, we really saw a huge demand effect that is taking place. I think people are certainly wanting to have a better house, a bigger house. People are committing to buy a house. Not only that, we are getting NRI sales, which are unprecedented now. So all in all, real estate is looking up in terms of it. We've seen a price rise over the last 4 months of almost 5% on an average across industry. I think that's a positive sign in terms of the demand. And in spite of the increase in the number of launches, the overall product which is unsold in the marketplace has shrunk by almost 20 to 25%.
So signs of buoyancy clearly are there, but you know, some people seem to be saying that it's at the luxury end, the really high-end area is where nobody knows where people get so much money from. You know, there are people buying houses for 10 crores. 10 crores, so TK is now almost considered in cities like Delhi and Mumbai and perhaps even Goa that this is run for the mill. People are buying houses for 30 crores, 40 crores, 50 crores. We are hearing deals like that happening.
No, I think that's only the top end of the pyramid. I would say the mid end and the luxury end, which is above 1 crore rupees, is also seen a huge rise, which is true. Another strange thing, as far as I'm concerned, in my 40 years of being in this career, this is the first time in my entire career that the affordable housing growth has been almost nil as compared to the extreme growth in the mid and the luxury segment. So, though of course the total volume of affordable segment is still higher than the mid and the luxury segment through the country, But the growth story is quite extraordinary as far as I'm concerned.
Okay, so let me just put it to you direct.
One of the factors which I do feel could be the fact that interest rates have been hiked. The lowest interest rate was around 6.2, 6.45% for various housing finance companies and the banks. Now it's 8.5%. Now that hits the affordable segment maximum. Okay. So I think that's probably an additional cause for the market at the affordable segment to actually slow down, because people can't afford the EMIs at that level. While at the mid-end luxury segment, that is not really an issue that is there. So all in all, positive markets, and
so the question that I have to ask is, somebody should be buying equity or should be buying a house? And if you have a house which you're living in already, should you be renting a house or should you be buying a house? I mean, those are a fundamental question. There is a question out here of choice, right? You can put your money into a FD, you can put your money into equity, you can buy a house, which means a certain sort of a commitment. And instead of buying a house, you could just rent and keep your money in equity. What would you advise people to do?
So in India, we don't have any social security. So a person who retires really has a difficulty of shelter. And you really don't know whether you can get a suitable house of your choice at the end of life when you're about to retire. So it makes good sense to buy a house in the initial stages for three reasons. One, social security. Second, you're getting income tax breaks in terms of it. And there is debt easily available for the purposes of buying homes. So even an ordinary person is able to do that. So one should buy one house. As far as the second investment is concerned, you want to have liquidity available to you. I think the capital markets do make sense, fixed deposits or capital markets. I'm not the best person. We have another person who's going to give us probably a better idea than I can. So I would not comment on that. But actually to tell people not to buy a house is criminal. Because really, if you're left with no house, at the end of the day, it's going to be terrible. And many times you're not able to get rental housing of the place that you want and of the quality that you want and which you can afford at that point of time. Because inflation definitely is increasing rentals too in good places.
All right, Niranjan Henanandani, thank you so much for joining us.
Thank you.
Thank you. Well, let's now take a look at what you should actually be doing by talking to the real experts. Some of the people who really understand. We're going to talk to people across from real estate to the equity market. And let's start by taking a look at the equity markets and at mutual funds. So we have Radhika Gupta joining us, the CEO of Edelweiss Asset Management Limited, Feroz Aziz, the Deputy CEO of Anand Rathi Wealth, and Dhirendra Kumar, the CEO of Value Research. All three of them with us right now. Thank you so much for joining us. Every Diwali, Dhanteras, I try and put out this show saying, what should people be doing with their money? Where should they be investing their money? So Feroz and Radhika, I'm going to be asking you about the equity market in some detail. But Dhirendra, why don't I start off with you, because you advise people on mutual funds across the board. So if you had to tell somebody right now, asset allocation, because that's a key thing, divide your money into equity and debt and cash and other things, what would you tell people to do right now? Where should they be putting their money?
Yeah, there are only two broad asset allocation which anybody should follow, equity tilted or debt tilted. And whether it be 80%, 75%, 60% is your choice. But any long-term investor should not be scared out of the market today. Market may not fall even if it might look expensive for a while. So don't try and be tactical about it. There are a few rules to follow, which is, be diversified at all times. Don't look for, this sector, this segment, or the small cap, mid cap. Be in an all cap portfolio, howsoever it be, Whether you pick 3 funds or whether you pick 5 funds or whether you pick a multi-cap fund and a flexi-cap fund. Make sure that you're diversified at all times. Yeah. Second is that don't try and time it, and that Indian investors have embraced beautifully in terms of the steady rise of SIP, and the SIP book is quite awe-inspiring. And that has created a context, which is we have such a large number of happy mutual fund investors today. Right. Third is that, most people would like to be, most people will be disappointed if they try and be tactical. Be guided by your goals. If you don't need your money for next 5 years, don't worry about what the market is going, where the market is going tomorrow or day after, because you won't be able to perfectly time it anyway.
All right. I think that's really important lessons. And I know, Dhirendra, you've often talked in shows like this about the importance of systematic investment planning, or SIP. I think a few years ago I said that SIP is the most important word that investors, retail investors who are really watching this show should be keeping in mind, which means put a little bit of your money into the market every month. Don't try and time it, because you will not be able to time it. Even the best experts don't time it. Let me throw the second thing which you were referring to Radhika, and then I'm going to toss the same thing to Feroz, which is asset allocation. So, Radhika, about that, and Radhika, you've been very closely involved with AMFI, which is mutual funds. For a retail investor, the basket that they have becomes a really important thing, right? Whether you should have 100% of your money in equity, 75% of your money in equity, 25% in equity, and within equity, what should you be investing in? That is also very clearly driven by who the particular investor is. If you've got a lot of money and you're young, maybe you can take more risks. If you're older and you need that money, take fewer risks. Asset allocation, is that one of the most important mantras?
It is. It's a very critical mantra, and it's one of those mantras people often forget in a bull market, because people start thinking, oh, I can afford to put everything in equity. I don't need to worry about when the market corrects and protection. And I think the reason for asset allocation is this, different asset classes perform well at different times. Even if you have a truly long-term holding horizon, there are times when you need to take out money for whatever reasons. And equity markets are up and down. I mean, they were down 50% in 2008. And having protection is important. It keeps you in the equity markets longer. Now, how do you go about doing your asset allocation? I think the answer is very personal there. I mean, I would just say a couple of things. One is, even if you're the highest risk investor, please have a contingency fund that takes care of your expenses for 6 to 9 months, because as I said, you never know what equities do. The second is, I think the answer is really personal. And I don't think, Vikram, it is dependent on age. My father is probably 70. He's a very high risk investor because he has a fully paid up home. His kids are independent. He earns pension. So he's a full equity investor. I'm much younger than him, but I have a much more conservative portfolio because I work in a high risk industry called capital markets. So I think asset allocation is extremely personal.
Okay, I'm going to come to the specifics of it, but let's not try and break that up into numbers, and I'm going to come to all of you on that. Feroz, you've heard the theory, and the theory which is being outlined right now is crystal clear theory, and virtually every expert will tell you that. Keep your money for the long term. Don't take risks more than what you can afford. Diversify your portfolio. Put some into this, some into this, some into that. Do it for a long period of time. Don't think you can time the market, because then that becomes gambling more than investment. That's how you really make a lot of money. Anything you'd add to that theory, and then the specifics of it? If you're a retail investor, what sort of an asset allocation should you be doing right now?
Hi, Vikram. I think very importantly, asset allocation, like Radhika and Dhirendra have also said, is very important. But it's also very important for us to see as stakeholders of this industry, or what is the current asset allocation of Indian households. Indian households have about 670 lakh crores this year, give or take 5-10% tolerance. And you would be surprised, or I was at least surprised, to see that there was more money in currency, savings accounts and bank account than we have in equity mutual fund. To my mind, the ideal asset allocation is 75%, at least if you have monies greater than 5 years, and several of us do. Secondly, like Dhirendra Saab said, valuations can remain elevated and for really long periods of time. I was very surprised to know that when Nifty was at 10,500, we had the same PEs as we have today, because Nifty is at 19,400, give or take. But the earnings have moved up from 532 to 946, which is what we expect to close this year, and the first 2 quarters have gone beautifully. So don't expect price correction is the only way to get valuations cheaper. Earnings growth also brings down valuation and in turn gives you price movement. So point is, we have a large role to play over the next 10 years. And because the last 10 years, if I looked at 2012 data, 270 lakh crores was the household savings. And that point in time, we had 51% in financial assets. Now it's just 52%. So for all what has been spoken on financialization, we have 1% more.
Right. Interesting point you're making, that over a period of time, equity is going to give you very good return. Let me throw that to the other two. Radhika, let me go in reverse direction this time. Radhika, given the fact that the Indian economy is growing the way it is, and it's likely to continue to grow. So if you're saying, what's it, 6-7% economic growth, then you add inflation to that, then you add corporate earnings will be higher, you could possibly be making 12, 13, 14% in the Indian equity market over a long period of time, is what you may expect. Now, there'll be ups and downs, obviously, which is why you've got to be careful. Don't be a short-term investor. But for a long term, if you're investing, would you also be comfortable for a lot of people to have 70, 75% of their money in equity markets? Or do you think that that's too high? And what's your overall take on where you think equity markets are going to go in the next few years?
So look, I mean, I'm as much of an optimist as others on the panel. I think if you look at the last 20 years of equity markets, we've probably delivered about 12% headline equity growth. And Vikram, I would say this wasn't the greatest period for India. We had multiple different parties in power. We had Asian financial crisis, we had global financial crisis, we had COVID. There was so much going on. And I think sitting today, where the Indian economy is, and one of the things that I get most excited about is really the meeting of top-down policy with bottom-up what companies want, which I think, is relatively unique to this era. I think the past is already a golden example and the future could be even brighter. So one, I'm very optimistic. I also think that the last decade for India was a little bit of a lost decade as far as earnings growth. That is turning around. So earnings have finally come, and you're seeing the numbers in corporate earnings, you're seeing the numbers in private investment. So I think there are a lot of things to be bullish about.
All right, Dhirendra, your advice at the end of the day, right now, fine, I've got X money, or I'm trying to figure out what to do with my money. Where do I invest it this Diwali?
One is that, as Radhika was saying, it's very personal. So depends when you need to really draw from that investment that you are accumulating. If you are still in your early phases of accumulation, have a larger allocation to equity and keep it multi-cap. That is, hybrid is a great way of doing it for any new investor, because we keep talking about asset allocation. We keep talking about rebalancing. Doing it is hard. And doing it is, hard, and also it's a difficult decision on many occasions, because that is when the market is going up. That is where it automatically happens. If you have chosen a vehicle, aggressive hybrid fund, which is 75% equity, 25% debt, it will keep it going, and there will be absolutely no tax incidence. Not only that, given the tax regime that we have for the debt mutual fund, it has become so tax efficient, you don't have to bother about it. You will be liable for any tax or anything only when you realize your investments. And then doing a SWP as and when if you can actually hold a mutual fund of that kind for 20 years, I really wonder that the whole journey could be a tax-free journey for you if you go with a 4%, 5%, 6% withdrawal after you retire.
Housing, gold, silver, under the mattress, keep it in cash. That's been what Indians have traditionally, done. There seems to be a movement to saying, okay, let's put that money into financial assets, let's put that money into FDs, into banks, and increasingly into the equity markets. That's a good trend, right? And it's something that will eventually stand India in good stead and stand investors in good stead. So long as they're not taking wild, risky things, buying crypto and stuff like that.
Yes, you're absolutely right, Vikram. If you look at the Indian households, they have been great savers. If you look at FY22, 47 lakh crores of savings in one specific year is not a small amount. Secondly, we are great savers but very bad investors because we have been the largest importer of gold for many decades. If gold was in rupee terms, it has given you the return. If you look at the data in terms of 1 year rolling, 2 year rolling, 3 year rolling, 5 year rolling, it underperformed equity significantly, and in several pockets underperformed debt as well. In Indian rupee terms, Of course, it wears a beautiful jacket, which is the rupee depreciation, gives it 3, 4, 5% fillip. Otherwise, gold as an asset class, if it was a great global asset class, we would have been the richest country in the world by now. That's not the case because gold in dollar terms have stagnated for decades, if not. So from 1979, 1980, when I was born, till 2003, it gave a negative return. So it's only the only asset class I know which can give a negative return in dollar terms for 23, 24 years.
Okay.
So point is, if we look at data, I think physical assets will have lesser merit in one's portfolio. And I think we all should look at data for prudent decision making.
All right, Radhika, before you leave us, any specific advice you'd give? Look, people are concerned right now, right? There's war happening in Israel, there's a war happening in Ukraine, there's a possibility of what's going to happen to oil. Will there be political instability here or not? Yes, the Indian economy is in good shape, but who knows? And people are wondering whether small caps in particular have become too expensive and whether they should be moving it into large caps. So any specific advice you'd give us on stocks or sectors before you leave?
So I think on market caps, I think there's a lot of noise on small cap, mid cap. I don't buy that narrative. I think a lot of the noise is because a couple of fund houses have decided to close down schemes. I think small caps are at the mid, and we run large, mid and small cap funds, are at the midpoint of the valuation cycle and at the early point of the earnings cycle. And I don't think the solution is to just run away from mid and small caps, or to move, hook, line, and sinker to large caps. The solution is to take the middle path, which is probably multi-cap. The other specific advice I would give around Diwali, Vikram, I was in Delhi 2 years ago when everyone was rushing to buy crypto asset and every uncle at a Diwali party was asking me this. I would say in this bull market, keep a sane head on your shoulder. Don't fall for the frenzy. Really take the middle path. And with all the global volatility, realize that it is going to be there, but have the ability to zoom out.
All right, Radhika, thank you so much for joining us. Feroz, let me throw that same question to you. What would you be saying in terms of specifics, small caps, sectors that you think are good, infrastructure, defense, whatever it is, and specific things that investors should not be doing?
Yes, so I'll make 2-3 points. I concur with Radhika that small cap is not overdone. So people who believe that small cap is overvalued, they may not have checked the earnings. So the estimate for earnings of Nifty small cap 250s, in our opinion, is 636, give or take, depends on what actually transpires for the rest of the 6 months. On a 12,000 Nifty level, we are still looking at 21, 22 P. So there is still a discount, significant discount to its median valuations it's at.
And broad sectors that you're excited by right now for the next 3-4 years if somebody wants to invest?
A brilliant question, Vikram, because when you look at sectors, you have to be very agile. So long-term sector, I would say pharma. We're going through a structural change in that industry. We were very generic kind of an industry. There is CDMOs creating a lot of innovation there. I personally think 3, 4, 5 years, pharma as a sector, being a little more overweight than it has on Nifty, has the potential to outperform. The pharma index has the potential to outperform Nifty by about 4-5%.
Interestingly, you're saying pharma, which is considered defensive and not the usual infrastructure and other areas that people think are going to be a play on the Indian economy.
Yes, because exiting them is going to be very critical. If you're looking at a long-term sector, is when it becomes an executionable advice. Because I had given an IT call in June, it transpired in 3 months. Again, it came down. So if you look at sectors which you can stay the course, is when a mutual fund investor can take any actionable from this advice. Is why I'm sticking with that.
All right, Feroz, thanks a lot for joining us as well. Bijay Bhambani now coming on as well, promoter Bhambani Securities. But before that, let me just turn to you, Dhirendra. Any other specific advice? We've done the theory. When you're looking at the markets right now, what are the areas and the sectors and the funds that are standing out for you? Someone has to invest money right now.
I would say that most people still don't have a plan. In fact, the large inflow that we see in mutual fund or through SIP is still a good amount of performance chasing. And I think it's very important or critical for people to work on some plan which has the dominance of equity for the long term. And they should devise that plan and stick to that plan and not get distracted with all the blips that come on in the way. And if one is able to stick around for a couple of years, then, you will have a happy Diwali for many years.
That's
Don't fall for it.
that's actually the most important thing for people who are watching this to take away. The best way perhaps to make long-term money for yourself is by investing in the equity market and doing it for a long period of time. This is what we began by saying. But, and it's very important, there's a very important but in this. The but is that doesn't necessarily mean you're going out there and trading in stocks or buying and selling shares or buying individual stocks yourself. As Dhirendra just said, 90% of people will burn their fingers in doing that. Vijay Bambani, that's a basic advice that we're giving people, but any specific suggestions you think people should be following right now?
Thank you, Vikram, for having me on your show. And I concur that retail traders should not be going out there and kind of deploying their money, especially in leveraged segments like options and futures. If at all you do want to dabble in them, do remember that you need to understand the game completely before you deploy money. Peter Lynch, I definitely remember, had said in his world-famous book now, One Up on Wall Street, people spend more time in choosing a refrigerator as compared to trading in the markets, which is very true. I think the newbies need to understand the game, need to study the markets, maybe for a year or two, if not longer, before venturing out and trading.
But I just wanted to ask you, when you're seeing what small investors or retail investors and others are doing right now and for the last few years, are most of them following safe investing, or are a lot of them still taking high punts and high risk behavior, which could potentially be scary?
Vikram, I'm very sorry to say this, but 99% of them don't even know what they are doing. They are following advice that is available in the public domain, in the free domain. And like Warren Buffett says, risk is not in doing something. Risk is doing something without knowing what you're doing. This is precisely what 99% of the newbies are doing. I don't think they understand the ramifications of their actions. So when you tell them risk-reward metrics like the Jensen's measure, the Kelly's criterion, the Traynor measure, the information ratio, most of them draw a blank. They don't know what we are talking about. So A, there has to be financial literacy, either from the private stakeholders or maybe even from the regulator and the exchanges. I think we need to upgrade the skills of an average rank and file investor / trader before we can expect that our markets will move from developing markets to developed markets.
So, I wanted to say one other investment class that we haven't looked at all is gold, right? A lot of people would be saying gold is a good thing to be looking at right now, given that there's uncertainty, there's wars happening here and there, who knows, uncertainty, turmoil. Gold typically does well, potentially high inflation scenario as well. What's your assessment of gold as an investment?
If you're not keeping 20% of your asset allocation in gold, you're missing out on something. And
hang on. Did you just say 20% allocation in gold? Because that's a way higher figure than most people would think. You're saying keep 20% in gold.
20.
Wow.
20% allocation in gold.
Why?
I'll back it up with reason now, Vikram. I build statistical models, so reasoning has to be provided for anything that I say. Now, the whole world has gone haywire and printed unbacked currency during COVID, right? And all this money that's floating around is triggered a hyperinflation storm. If you Google search how many countries are having elections, general elections in 2024, you realize that economic data will be gravely dressed ahead of these elections. When these elections are over, the inflation will be allowed to kind of get exposed in the public domain. And what, since 3,000 years, has been our best hedge against inflation? God's own currency, gold. You're also likely to see pro-cyclicality in asset prices. So far, what you've seen is counter-cyclicality. Counter-cyclicality is asset prices going in reverse, opposite directions of the economy. Pro-cyclicality is when it goes in the same direction. So now you're going to see realignment of portfolios worldwide come 2024. And I think you're very safe in gold.
All right, Vijay Bhamani, thank you so much for joining us. So the gold option, something that there were others who said, Feroz in particular was saying that gold may not be something to hold, but Vijay has some logical reasons for why a certain percentage of your portfolio should be in gold. So look, what does all of that add up to? We've heard from a range of experts, and I think the basic overall point that they made, invest for the long term. Don't do short-term trading, especially in the stock market or, God forbid, in cryptocurrency. If you're doing short-term investing, you'll probably burn your money. The advice you've got from the experts, it is Diwali, should put aside a certain percentage of your money in financial assets and in other assets. Build up for your retirement. And that means having a diversified portfolio, as you just heard from Mr. Hiranandani. In case you don't already have a house, you might want to start thinking about acquiring a house at some point. If you don't have anything in gold, well, maybe a certain percentage of your portfolio in gold. The rest, financial assets, and have a diversified mix between equity and between debt. So have a good asset allocation, invest for the long term, and you're probably going to be in good shape. Well, hopefully in this Diwali special on the India story, you've got a lot of advice on where you should be investing your money. So we're going to leave you on this program with some entertainment as well. And one of the most awaited series for quite some time, The Railway Men, set in the backdrop of the Bhopal gas tragedy. It's been capturing a lot of headlines. And I did get a chance to catch up with the entire team behind The Railway Men just a short while back. So I'm going to leave you with this special interview that I did with the team. Well, we are now in the era where when you're really sitting and waiting for a piece of content to come out, it doesn't have to be a film that you're waiting for. It can be a series. And one of the most awaited series in quite some time, The Railway Men, about to be out there on Netflix, big budget, impactful, and based on an event that has left a scar on the collective psyche of the nation, the Bhopal gas tragedy of 1984. Fantastic ensemble cast, and it's great to have them all with us, along with the director, Shiv. Thank you all so much for being with us. Each one of you is the legend. So Shiv is here, of course, Madhava and KK, Rabil. Thank you all so much for being with us. I'm going to start with you, though, Shiv. A lot of expectations that I said, and that's also interesting how you can have so much expectation and so much interest in what was once OTT pe aa raha hai, it's not that big. Yeah. Now OTT and things like this releasing as big as a film, including in the budgets.
Yes. So, thank you for having us here. And, now the digital spectrum is not, it's made its own space in India and across the world. People are looking at digital content on the same lines as cinematic content and content that you can follow in cinemas, because you get a chance on unlike something that's coming in the theaters, which is limited by the amount of time the content can preview for, as well as box office expectations, and you have like that weekend number, the weekend figures to kind of fulfill. Unlike digital, where you can choose content, you can choose to play content as per your wish and as per your own timings. In the we're coming and delivering it to you in your lap, so you can come and watch it. You can watch it at home whenever you feel like. And more than that, it's enabled filmmakers, especially me, especially with this series, that we can take stories that are not spoken about so often and tell them in a fashion that we could not say in cinemas, because we have the advantage of episodes and longer time and more freedom to say stories the way we want to. Especially like in this case, this one is like a 4-part series limited to one season, 4 hours. You can watch it in one go, hopefully, and really enjoy it. And
binge watch it or watch it bite-sized as
yes,
the time,
exactly.
as the time,
yes, and at your own free will. Yeah.
Madhavan, so that help us sort of draw the comparisons and the contrast when you're doing things at this level for Netflix compared to doing a film.
So when we accept a project, sometimes it comes endorsed by an OTT that's already going to showcase it, or it comes with a production who says, I'm going to make the series and then we'll sell it. With Railwayman, it was a predestined decision where they said they make the series and then we'll see which platform to go to. So I was very curious to see what Yash Raj had in mind, because it was their first project on OTT, and with Yash Raj, you're assured of quality. But this one,
and their entire heritage, their entire history has been cinema. So it's like, okay, we are going to now try this. Because obviously, it's also an indication of how big now OTT has become. That Yash Raj getting into it.
Exactly. And getting it into in such a big way. And for me, it was a matter of great interest that they would choose to get into it with a story like this. With Shiv debuting with a story like this about, the Bhopal gas tragedy. And Vikram, I've always had this angst where I keep thinking that it's always the West that's been portrayed as people who can save the world, or a Hollywood movie where if there's an alien attack, it's always the American who's out there to save the world, and the rest of us just follow suit. And we've had our own sense of, heroes and things. And most of the battles have been that we've been known for, our independence struggle or such like. Bhopal gas tragedy is one of the bigger ones in the world. It's one of the biggest industrial disasters that is known to man. You don't see much Instagram reels on it or a documentation on it. More people have perished in the Bhopal gas tragedy in one night than have perished during the tsunami in Japan, for instance, right?
And I'm going to come to the stories of heroism that you are capturing, which are not spoken about. We know a lot of the villains of that particular story, but not the heroes. So that's why I'm going to be interested in that. But just to finish this sort of a theme about the scale, anybody who's seen the trailer, and KK, the trailer's obviously got a lot of love. It's sort of seeing the size and the scale of it. It's not the only, you've done these before at very high budget. Budget doesn't seem to be a constraint anymore?
Thankfully not, because in OTT, especially if you have an 8-part series, for example, it's like making about 3 films. It's a long duration. And the advantage in OTT is that you get to juice out everything that is there to its maximum, including characters, including stories, etc., etc. So for me, OTT is an extended form of storytelling, which has got an end to, unlike a serial, for example. So it's somewhere there in between. It's a madhyam mark. It's a middle path, and to make things believable is expensive at the same time. To make things non-believable also might be expensive for other reasons, but to make things believable, like it's in this series of ours, it's an expensive proposition, because you need to create everything that is so believable that people are involved with the entire experience of it. So yeah, and as she was saying, OTT comes to you, we come to your house, we come to the audience's house, and you can watch it at leisure whenever you want to, vis-a-vis theatrical releases in which the audiences have to go at a particular time. So yeah, budgets, some projects, of course, the budgets are a constraint, but most of them now have come to the realization that if you got to create something which is world content, you need to spend some money.
I mean, you seem to have only been doing a lot of web projects, right? Kala's web project, others. Yeah. So web projects are the ones that you've already been looking at?
No, I have not been looking or planning anything, sir. I genuinely, as things have been going, I've been taking it as it comes. It so happens that, my career started when OTT was booming, and it just matched perfectly. But honestly, for me, of course, because I've grown up watching films in the cinemas, I would, if I'm given the opportunity, I would love to do that. But for me, working in a film or a series, right, or acting in a story, right, it is not about OTT or theatre. It's just the love of performing for the story, and that's that.
Okay. Let's just come now to the specifics around this, and I'm going to try and get as many spoilers out of it as I possibly can. Well, actually, I'm not. What I was just saying, villains and heroes. When it comes to Bhopal, one of the worst incidents we've had in this country, very clear villains, and we know some of the people to blame who are there. But the stories of heroism, and at the back, when you saw the trailer, you say, yes, there must have been a lot of heroes that night. A lot of people who risked their own lives trying to save others, but we don't know about them.
Yeah, so, that's exactly what attracted us in the first place. In one of the darkest nights in Indian history, this was a ray of hope. there were some people who went beyond their duty, beyond their responsibility towards their families, beyond their, own lives to save other people. And that's the beauty of the Railwaymen. The reason behind us making this was this. Reason that the fact that we could get to tell this story through such a lens, through such a viewpoint that, hasn't been seen before. Was our inspiration and was the reason we took this up. Because if we could give you a lot about what happened on that night through the journey of these extraordinary men, we thought that could be.
But it's still fictionalized, right? This is not what you sometimes say, this is a true story or based on a true story. This is inspired from many true stories.
Yes, it's inspired from many true stories. So basically, in a cinematic, in cinema, you kind of have to give characters like ebbs and flows and, journeys and character arcs. And for that, we've kind of taken true stories which we heard on ground, read books, met multiple people, went to Bhopal, researched on ground, took all those stories and amalgamated all of them and, put them into character arcs and created these amazing characters out of them. And,
Well, there seems to be an interesting way now to really tell the stories. You're fictionalizing it, but you're still being inspired by what actually happened. Is that what you're also finding? This particular style of a lot of the stories that we are seeing are real stories, fictionalized, of course, but based on reality.
Yeah, so when you have your base which is solid, when you say it's based on actual facts, then it becomes very easy not to have to create the world again. And then you get to create characters based on multiple characters and you amalgamate them into one. So that becomes even more enticing. And so I think it's one of the best ways to base a narrative. And so that, people are always guessing which part of it is true and not, and eventually just forget and become impacted by what the storytelling is.
Why do you think that these stories have never filtered out? 1984 was a long, long time back. Actually, most of the country today was not born at the time when the Bhopal caste tragedy happened. Yet it has left a scar on the country, but the bad people, not the good people. Why do you think their stories get lost?
I guess it's also about information dissemination, because information wasn't available then. If it was today, it would have been all over the news. And the bad people could get away because of that, I think. And the good people were not known because of that. So we are trying our, in this story, to put it in a different perspective, it's about an organization called the Railways. Now, you've got to understand that the railways in India is the biggest and the widest in the world. The networking of railway, the rail tracks, etc., and the kind of infrastructure that we have is colossal compared to the world. And number two is that it's not just the job of a railway guy to reach you on time. It's also to reach you safely. Okay, so safety is an inherent quality in a railwayman. Now that quality comes to fore and transforms into courage because of humane reasons in this series, and that's what actually caught me as far as the screenplay is concerned. I realized that here we are talking of an organization called the Railways and the railwaymen and their contribution and the courage that they had to save as many lives as possible. As far as the previous question is concerned, yes, I think it's all to do with how much news was available then and how much news could be controlled, etc., etc. So that is a different perspective.
Yeah, as you were saying, there were no reels at that time. There were no people live tweeting what was happening. There was no, 24-hour news channels to actually capture the magnitude of what happened. Any individual story that you encountered while working on this project that really stuck out for you?
Sir, it was not because I'm from a different generation. I was really, this generation is not aware of this tragedy as much, right? And that's a shame. But when the story came, it was not the tragedy itself that attracted me towards the story because I was not aware of it. It was the perspective of heroism, right? When you think of a hero, you think of, this larger-than-life figure with a cape and superpowers and he can do anything. But you never look at the common man as a hero. And that perspective, that what is heroism, right, is just a point of view of how you look at a crisis, right? And the decision you make at that point of crisis, that's heroism. That's what it all boils down to. That's what attracted me towards the story. And then when I started working for the film is when I truly got, engrossed in the research of it. And in the research of it, I started realizing that this is something our generation must know. And it is through the film that I really started to understand what the tragedy was.
By the way, we were talking just a little while earlier about the fact that many of these stories from India actually would make sense for an international audience. And I'm sure that's one of the things when you're working on projects like this, you do keep in mind these are stories that can actually translate all around the world.
Yeah, and the whole idea of putting the story out is that, to make people realize that small amount of carelessness, people are not doing their duty at the right time. For example, this grass tragedy was just negligence. It was not a preconceived, intent to kill people. It was just people who didn't take their job seriously. So putting these stories out, and especially internationally, maybe if you can make people aware that your small responsibility or the lack of it can actually end up in a tragedy that makes 20,000 people just vanish overnight, and that's exactly what happened in Bhopal. So I think on that front, making a story like this and making it international makes a lot of sense.
When you were doing the research for this, did something surprise you when you were? I've been to Bhopal. I've been to that place. I've been to that gas tank and that place. It's a very bleak place, right? And even now, so many decades later, it's still a very bleak place. Is there anything in the research that you saw which surprised you? And how much of these stories are actually based on truth? I should also add that.
No, a lot of like when you watch the series, when the audiences watch the series, they'll realize that a lot of it is, they'll be able to tell like this is based from, this is from true stories. There's also like a nice reminder at the end from what's picked from where and stuff like that. So you kind of, make connections. But, and also to give you perspective of what happened on the night. But when we went on ground in Bhopal, I remember going inside the factory and, one of the most exciting things was kind of like, we wanted to get this show like to look super authentic. So we had to actually go into the factory, take like old images and, put everything together to make like a ground map of the factory of where the entrance was, where did people run from, where did people go, because, there were like so many tales of like, which were contrasting. So we kind of had to like take multiple information sources and, get that out there. So I think that was fantastic to, do an experience and, hopefully people will see this and recognize it.
Okay, last thoughts to leave us with. One of the things that sometimes happens when you're making these serials or films about old events is there's a belated sense of pushing for justice, justice for the victims, justice for the people who were guilty, who may have got away, scot-free, and recognition for people who are not recognized till now. Is justice, you think, an important thing that you should walk away from this with?
I think justice is an all-pervading concept. It's not now, it's not yesterday, it's all the time. So if something can happen because of this, I think all of us would be really, really happy. Because it's out there, the pain, the effort, the courage, everything is out there in this series. So, and people who have watched it have, they can endorse it for themselves. But it does leave you with that feeling that of people not being recognized at the same time, many people getting away with it, etc. So I think on both fronts, I hope something happens after watching this series.
All right. Well, thank you all so much for joining us. It was great speaking to you, and looking forward to seeing this and remembering 1984. Look, people should not forget. And as I said, a large number of people in this country were not born when Bhopal 1984 happened. But it is something that has left a scar on the psyche of this nation. And you should not forget. You should not forget what happened in Bhopal. Not the bad people and not the good people. And that's all we're going to have for you on this episode of the India Story. Do join us again next week. Bye for now.